Could 2026 be the year crypto shatters every record we've ever seen? Picture this: Bitcoin blasting past $200,000, Ethereum soaring to $15,000. Or are we about to see some unexpected twists that nobody saw coming? Today we're diving deep into the top forecasts, surprising new trends, and the hidden stories that every single crypto investor needs to know before making their next move. This isn't just about numbers, it's about understanding the seismic shifts happening right under our feet. So, get comfortable, because what we're about to uncover could completely change how you see the future of digital assets. Let's start with the king, Bitcoin. The big question on everyone's mind is, where is the price headed? The consensus among many leading experts is that Bitcoin could reach a price range between $150,000 and $200,000 sometime in 2026. What's fueling this incredible optimism? A huge part of it is the tidal wave of institutional money pouring in, largely thanks to the new spot Bitcoin ETFs. Think about BlackRock's IBIT ETF. It has single-handedly made it easier than ever for massive financial institutions, pension funds, and corporations to get exposure to Bitcoin. This isn't just a small trickle. It's a fire hose of capital entering the market. But some forecasts are even more bullish. Take Standard Chartered, for example. They've put out some extremely optimistic projections, suggesting Bitcoin could even touch $300,000 by the end of 2026. Their reasoning? Record-breaking ETF inflows combined with supportive government policies, creating a perfect storm for a historic price surge. But here's where things get really interesting, and it's a surprising insight that many people miss. For years, we've all been obsessed with the 4-year halving cycle as the main driver of Bitcoin's bull runs. But according to many market experts, that narrative is changing. The halving is still important, of course, but it's no longer the only star of the show. The new engines powering Bitcoin's next major rally are what we call structural shifts. We're talking about the explosive growth of stablecoins, which are becoming the bedrock of the entire crypto economy. We're talking about the tokenization of real-world assets, which could bring trillions of dollars of value onto the blockchain. And perhaps most importantly, we're seeing growing regulatory clarity around the world. As governments establish clear rules of the road, it removes a massive layer of uncertainty that has held back institutional investors for years. So, while the halving provides a supply shock, these new structural forces are creating a sustained, long-term demand shock. It's a completely new dynamic for Bitcoin, and it's why the forecasts for 2026 are so incredibly ambitious. Now, let's talk about Ethereum and the wider world of altcoins. If Bitcoin is the king, Ethereum is the undisputed queen of the crypto space, and its future looks just as bright. Most analysts are forecasting Ethereum to trade somewhere between $8,000 and $15,000 in 2026. This is unjust wishful thinking. It's based on solid fundamentals. The demand for Ethereum is constantly growing, driven by its dominance in decentralized finance, or DeFi, and the ongoing innovation in NFTs and digital collectibles. But there's another, more technical factor at play: staking scarcity. With the move to proof of stake, more and more Ethereum is being locked up, or staked, to secure the network. This effectively reduces the circulating supply, creating a supply-side squeeze. When you have rising demand meeting shrinking available supply, you get the perfect recipe for a significant price increase. And what about the altcoins? It's a classic pattern is that once Bitcoin makes its big move and then stabilizes at a new, higher plateau, capital starts to flow down into the more promising altcoins. This is what we call the altcoin cycle, and it's expected to play out again in a big way. But this time, something is different. We're seeing a handful of altcoins gaining recognition as legitimate, blue-chip crypto assets. Prime example is Cardano, or ADA. It's not just a speculative coin anymore. Some US institutions are reportedly considering it for their strategic reserves, putting it in a very exclusive category. ASA. Here's a lesser-known story about Cardano that explains why it's gaining so much institutional trust. For over 8 years, the Cardano network has maintained continuous uptime without any major contentious hard forks. Think about that. In a world of constant hacks, drama, and network failures, Cardano has been a pillar of stability and reliability. This track record is incredibly valuable to large institutions that prioritize security and predictability above all else. Its quiet, consistent performance has positioned Cardano for what could be a very strong bull run once Bitcoin gives the green light. It's a testament to the idea that in crypto, Slow and steady development can indeed win the race. Zooming out, 2026 is shaping up to be a truly pivotal year for the entire cryptocurrency industry. We're moving beyond the phase of just being a niche, speculative asset class. Crypto is becoming more and more tightly integrated into mainstream finance and even public systems. The trend of institutional adoption is not just continuing, it's accelerating. Every week, it seems another major financial player announces a new crypto initiative. Whether it's offering custody services, launching a tokenized fund, or integrating blockchain into their back-end systems. At the same time, we're expecting regulations to become much clearer. For years, regulatory uncertainty has been the big boogeyman for crypto, scaring away conservative investors and creating a risky environment. As governments and major economies finalize their frameworks, it will de-risk the asset class significantly, making it much more attractive for mainstream capital. And let's not forget about stablecoins. Projections show that the total value of stablecoins could surpass $1 trillion in assets under management. This is huge. Stablecoins are becoming the rails for a new global financial system, powering everything from instant payments and international remittances to providing a hedge against local currency devaluation. They are effectively exporting the US dollar across the globe on crypto rails, a trend with massive geopolitical and economic implications. Of course, no forecast would be complete without talking about the potential risks and the unknown variables. While the optimism is high, we have to remain grounded in reality. The crypto market doesn't exist in a vacuum. Major macroeconomic factors, like interest rate cycles, inflation, and global economic growth, will always play a huge role. A sudden recession or a change in monetary policy from the Federal Reserve could easily throw a wrench in the works. Geopolitical events are another wild card. Conflicts or major political shifts can create waves of uncertainty that send investors fleeing from riskier assets like crypto. There's also an interesting dynamic happening with retail investors. On one hand, you have the crypto-native retail crowd, many of whom are still cautious and somewhat skeptical after the brutal bear market and the scandals like FTX. They've been burned before and are wary of getting too euphoric. On the other hand, you have a completely new wave of traditional retail investors who are now gaining exposure to crypto for the first time, but they are doing it through the safety and familiarity of ETFs managed by trusted names like BlackRock and Fidelity. This creates a fascinating split in market sentiment. The skepticism of the crypto natives could act as a brake on runaway speculation, while the steady inflow from new ETF investors provides a strong floor for the price. How these two forces interact could cause some unpredictable short-term swings in volatility. Even within a broader uptrend, it's an unknown factor that we'll all be watching very closely. So as we wrap this up, what's the big picture for 2026? It genuinely looks like it could be a landmark year for cryptocurrencies. We're not just talking about hitting new price milestones, although those are certainly within reach. We're talking about a fundamental shift in how the world views and uses this technology. The growing acceptance across finance, technology, and even government sectors is undeniable. The infrastructure is maturing, the regulations are clarifying, and the institutional money is finally here in force. Whether you're a long-term holder who has been in the space for years, or a new investor just dipping your toes in through an ETF, understanding these deeper trends is crucial. It's not just about chasing the next hot coin. It's about recognizing the structural changes, the hidden stories behind the projects, and the potential risks on the horizon. The narratives are shifting away from pure speculation and towards real-world utility, institutional adoption, and long-term value. The insights we've discussed today could change the way you approach the crypto market forever. Thank you so much for joining me on this deep dive into the crypto forecast for 2026. I hope you found it valuable. If you did, make sure to hit that like button and subscribe to the channel for more content like this. I'd love to hear your thoughts in the comments below. What are your price predictions? What trends are you most excited about? Let's continue the conversation down there. Thanks again for watching, and I'll see you in the next video.